A very good morning, traders. Welcome to the Flow Show. A new week begins, 12th of August. Oh, we're nearly through the year already. Time flies when you're having fun. Bit of a quieter market this morning. Feeling definitely a bit summery, which on one hand is good news because it means there's no shit hitting the fan for the moment compared to last week. But anyway, gives us a chance to get set up for the week ahead, and that's what we'll do on today's show. Right, let's kick off with some of the headlines that have been bandying around. Despite the drop in the Nikkei and other stock markets last week, Japanese retail traders and investors are apparently happy to keep getting in. They're buying the dip in the Nikkei and other foreign equity markets as well. So they haven't been shaken out too much from some of these moves. Hence why it's been quite a bit of a bounce back from those lows that we saw last week when, as I say, the proverbial was hitting the fan. As you see, we still had a bounce up, but we have been running into trouble since the middle of last week, up around the 3,600 area in the Nikkei there. So we've got this bounce, but, you know, it's, for my opinion, it's still not out the woods just yet, but it's looking a bit more constructive than it was this time last week anyway. Over at the Bank of England, BOE's man says that wage growth is still a concern for inflation, saying that survey evidence suggested that companies were still expecting to make relatively big increases to both wages and prices, which, she says to me right now, I'm looking at a problem for next year. So she's saying there's still inflationary pressures in the pipe. Some firms who weren't raising prices and wages as much this year face a round of catching up to do, which will see inflation pressures coming in next year. She's one of the big hawks over at the BOE, so no real surprise to hear her talking that way at all. Keeps the pressure on the Bank of England to take a slow and steady approach. Just looking at some of the Fed heads as well. We've had a couple out. Fed Collins says it's appropriate to begin easing soon if the data comes in as expected. The timing and price and pace of cuts are to be based on the data. Big Hawk Bowman says that the progress in low inflation during May and June is a welcome development, but inflation is still uncomfortably above the committee's 2% goal. She says she will remain cautious in her approach to considering adjustments to the current stance of policy. Doesn't tell you she's quite in the mood to cut rates in September. We do have obviously some data this week that may change her mind. Just going back to the data, we had Canadian jobs last week. A little bit soggy on one hand. Employment change was expected to go up near 27,000. Actually went down nearly 3,000 on the employment there. The unemployment rate, that ticked down, was expected to tick up. Now, the month before, it saw a fairly sizable move there as well, but we also saw a move in the participation rate. This participation rate dropped back quite a chunk. Usually participation rate moves maybe 1 or 2 pips. It actually dropped 3 pips to 65. So you might have expected a bigger drop in the unemployment rate, but it in the end it stayed unchanged over last month. So that makes the unemployment rate a little bit more negative than the participation rate suggests. A big move in part-time, or big negative in part-time employment there, completely offsetting obviously the full-time to give that negative number. So maybe some seasonality involved in there. I'm not too sure. It is what it is. But if it wasn't for that big part-time move, the jobs picture would have looked a bit more rosier. So can take the positive side that was still a decent gain in full-time employment. And any country would rather see gains in full-time than part-time. Gains in both would be nice as well. So overall, a little bit mixed numbers there for the employment numbers. That's a mess for the BOC to unravel later on. Goldman Sachs are keeping their beady eye on hedge funds still, and they say that hedge funds added more shorts than long equity bets for the fourth straight week. Hedge funds sold or net sold Japanese equities at the fastest pace in over 5 years between the 2nd and 8th of August. So that data marrying up with the moves we saw last week. We'll see if that changes this week. Now, the big thing affecting markets this morning, over the weekend, as we were saying into the end of last week, has been all these geopolitical tensions going on. So we've got this Iran-Israel stuff still bubbling away. Iran has been, or Hezbollah, or whatever their proxies are, been lobbing drones and whatnot over Israel, but there's still warning of a significant attack to come, maybe around Wednesday. That's got the US and the UK and others sending naval ship subs over to the area as fast as possible, just to show some force against that. So we've still got this potential attack bubbling under the surface. Now, as always, Iran is known for talking a lot of hot air, but delivering stuff just for show. If you remember some months ago when they threatened an attack, they lobbed over the highest amount of drones or something they had for years, most of which got shot down. It caused limited impact. It was the damage was in, not densely populated areas. As I say, it was more for show than anything else, but the threat is always there that they step up to something a bit more dangerous. So that's got various risk assets, pricing around that, things like oils and gold. So we need to keep an eye on those. As I said, Tuesday, Wednesday, I think, is the touted time when something may happen. Meanwhile, they're apparently going to deliver hundreds of ballistic missiles to Russia soon and train dozens of Russian military personnel to use these missile systems. So this is now falling into what's going on, this call it an uptick in activity in Ukraine, Russia, with Ukraine actually invading parts of Russia, clearing out towns, evacuations. It's a bit of a mess over there. So all this is, as I say, playing into the risk mood we're seeing at the moment. And as I said, we mentioned about this last week, coming into the weekend, that it does seem like a bit of a step up in action. And if that's the case, we're going to see a step up in reaction. So Russia's obviously not going to take this lying down. So be warned that it may respond in larger kind than they have previously. We've got headlines dropping around, airlines, not flying over certain areas. Lufthansa has said they will not be using Iranian and Iraqi airspace up to including the 21st of August. All flights to Tel Aviv, Tehran, Beirut, Amman and Erbil are suspended up to the 21st of August. So you can just see that the whole world is steering clear of this area for the moment. So that's something just to keep on the back burner, what's going on. That's it for all the headline front and whatnot. As I say, it's been a bit of a quiet one. There are a few other bits and pieces floating around, but nothing too important. So what we'll do is we'll have a quick look at what's coming up this week. Not a lot out today, so it's going to be potentially a quiet one today. Japan on holiday, or were on holiday. It's nearly the end of their day there. Happy Mountain Day to all those guys over there. We're getting a lot of inflation stuff coming this week. Tomorrow morning, we've got Japanese PPI coming in there. We've got Aussie wage prices. Then into the European day, we've got the UK labour market. Those are all important wages numbers. German zoo tomorrow as well. And PPI, a funny month this month, because we usually get PPI after CPI, but we're getting PPI first. So that may get the market jostling around for what those CPI numbers are on Wednesday. As you can see, that's going to be the big data US CPI. But on Wednesday, we do have the RBNZ, largely expected to keep rates unchanged, though it's a bit more of a closer run thing. The actual market pricing is quite high, actually, 70–80% favouring a cut. So it could go one of two ways for the RBNZ, but we'll talk about that one in more detail tomorrow. UK CPI also on the docket Wednesday. As we've already had the BOE, this will tell us whether that message from the BOE is valid or not. I think a small uptick in CPI is expected from those numbers on Wednesday. PPI 2 coming out as well. And then we get some, I think they're final numbers from France CPI and revision GDPs for the Eurozone for Q2. And then, yes, it's on to that CPI data from the US. On Thursday, revised GDP from Japan. And then we get Aussie jobs, which could be an interesting one again, following the RBA the other week. Just to see how that message is going to translate into future data. A few bits and bobs from China as well coming out. They're not looking overly great still at the moment. Monthly GDP numbers from the UK and some IP data as well. Then Thursday continues US with quite a decent data slate. Retail sales, jobless claims, Philly Fed, Empire. All coming out at the same time. Industrial production as well, some inventory data, housing data. So quite a busy Thursday, or busy data Thursday, shall we say. On Friday, we've got UK retail sales, and then some more housing data coming out. Canada housing starts, US housing starts and permits. And then US consumer sentiment, that'll be the, I think it's the Michigan number, as it's on a Friday. So let me just double check. Have a look. Yeah, the Michigan number there. So that'll be the flash number for the new month coming out for that. So a good end to Friday, but it's going to be this Wednesday and Thursday really going to hold the candle for what's going to happen to the Fed, because obviously the week after next week it's going to be Jackson Hole, and that's going to be where the market's going to be looking for the Powster to maybe give us a bit more on what's going to happen in September, as well as a ton of other central bankers breaking up their summer holidays to go and have a jolly up in Jackson's Hole. So that's it from the data that we're getting this week. So let's have a look at what's going on in markets. As I say, not an awful lot happening this morning, so I'm going to keep this one fairly short and sweet. Euro dollar, we did have a little dip under that 109 big figure last week, but we're back above 109.10. So we're really continuing this sideways action. Rallies limited to that 40 area, then potentially the 60 area before we start thinking about 110 again. That move did pull up short of the 108.70 zone, the top of my zone, that's been in play for eons and eons. So looks like a bit of protection buying ahead of that level there. Otherwise, it's a bit sideways. Not really moving for any risk moves or anything like that in euro dollar. It's got its feet up. It's just waiting to see what happens. Vol pretty low, 5.64% in the euro dollar at the moment. So again, that's telling you things are pretty quiet. I don't see that changing anytime soon. Dollar yen, still, again, it's walking line hand in hand with what the Nikkei is doing. So you saw those sort of double top there into the walls of 36,000 for the Nikkei. Well, we've got the 148 for dollar yen. It's trying to get a build on this 146.50, 147 area. If it does that, if we manage to get a decent amount of support building there, then we're probably going to be looking for a push higher up into the 148s, maybe towards that old fib 148.68. But overall, there's nothing really yet that says that this trend off of the highs 162s is really for reversing just yet. So it's still a bit of a coin toss from here. But while we hold support, then it gives it every chance to start building more and heading a bit higher. If we're back under 146.50 and holding, then we're probably going to be looking down towards 145, 144s, something like that. Vol is still elevated, 13% in the 1 month at the monies I look at. The sort of high vol, low vol pivot line is around 6 to 7%. If it's below 6, 7%, things are getting very quiet. If we're above, that's when things are getting much busier. So we're still running higher. Paul, as a strategy, what do you think of the 3-bar reversal, which a lot of traders use? Can bypass the agony of trading news. It's not something I look at. I'm not one for reversal candles. As I mentioned last week, I had my little rant about patterns and head and shoulders and whatever. It's not something I look at, purely because there's a lot of different candle patterns. You got your hammers, you got your outside days, inside days, this, that, and the other. It's just too confusing for me. Not confusing in what it means, but it just confuses the picture. If I'm spending all day trying to work out what a candle's doing, rather than what the price is doing, it just makes things a bit messy. So if you want to bypass trading news, and again, this is a conversation I've had with several traders last week in particular, and it boils down to people who maybe you trade more part-time. The news isn't something that is really important in terms of trading. If you're trying to trade, if you only get a couple of hours here or there between work, end of the day, in the morning before work, if you're trying to cram in a couple of hours trading here, there, and everywhere, the news really isn't helpful, because you don't have the time to react to that news, or you're trying to trade the news after it's happened and squeeze it into the price action. So if news is an issue for you and you want to stay out of the noise, the intraday noise, the everyday noise, you need to switch to your higher time frames. You need to be trading H4 dailies and setting your levels on those, the bigger, the wider levels, the more historical levels, and just take yourself out of the everyday noise, okay, and set your trades by that, because what you find is you get ranges, and you get decent ranges, and you get levels where the market really has to be doing something, or the news has to be doing something to break those ranges. I've pointed it out in several pairs last week. Euro sterling is a great example of range trading, the big levels, and you can trade those levels without the noise, the intraday noise. What you can do if you're a part-time trader and you're not at your desk all the time is you can use that time when you're at your desk to catch up on the news, to see what's happened with the central banks, with the data, and then you can apply that to your higher time frame chart. So if you've got a big level you've been waiting weeks and weeks for, and the price is moving there, you can assess the news and decide, does this news justify the price moving there? Does it justify the level breaking? And then at that point, you can make the decision to trade that level or not trade that level, depending on the news. So rather than trying to squeeze in trades intraday, you're now just sitting back and using the news to assess your wider levels and bigger levels. Joe, Mr. Northheimer, what time frames you use for trading? I use all time frames for trading. As I'm often telling people, and again, I'll go back to this example of what I used last week. I've got, for a lot of pairs, I have two charts, okay? I have my everyday chart, which is the one which always looks the most messy, because it's got tons of lines on, because I'm always chucking this line up for this day and this hour and that hour. So my charts can be a bit messy. And then I've got my cleaner longer term charts, which have very few levels on it. Even levels like pairs like dollar yen. A lot of charts I have very clean charts that I just look at as, say, 4 hour daily charts. And this just gives me a broader overview, okay? But because I'm sitting at my desk all day, every day, I can get into all the smaller levels. I can look at euro sterling that I'm short now and note the levels that I need to watch for trading. You know, I was trying to get a partial TP on my short at 85.50. We got down it. Never happened. Never happened last week. Got close, missed it. Got close, missed it. And then we've had 2 attempts below, and you know we're still above. And then I've got level 85.35. So all these little levels I use because I'm watching them intraday. So I may not use them to enter, but I'm potentially going to use them to take profit on my trades as we go through, because they're the levels that we may run into trouble. But if I was part-time trading, and when I was part-time trading, you know, 15, 20 years ago, before I went full-time again, then I would just look at bigger charts like this. And I would say, right, I don't care about the noise in here. I'm going to trade this level, that level, that level, that level, whatever pair. And that's all I'm going to trade. I only need 4 lines to trade. This one works. This is why I love US sterling, because when you hit those big levels, they work. You know, the evidence is there, clear as day. Hello, Arif. I'm all good, mate. Hope you are too. Ali, what are you up to today, mate? Dollar CAD. Can we go long on the 4-hour chart? Let's have a look. Dollar CAD. 4-hour. Oh, where's my moving averages gone? Let's get them in there. Boom, boom, boom. So what you up to, mate? You want to go long on the 4-hour, 250 DMAs. Well, my 200 is down here. And my 55 is up here. So I'm not sure where your MAs are, mate. You'll have to let me know. Overall, as I've been saying, dollar CAD is sitting pretty much in the middle. It's not really moving again with oil. We've had a bit of a leg up in oil, or it's continuing to grind higher, shall I say. But we seem to be faltering in terms of what that means for the Canadian dollar. And it's, as I've been said previously, the correlations are fine, but if you're getting a decent move in one and the other one's following it, at some point that other follower is going to run into its own fundamental levels and places where traders go, I don't care what oil's doing, CAD is gaining too much for what we like, so we're going to start going against it. So when you look at correlations, you've got to be careful when they're switched on and when they're switched off, and when they've gone as far as they may have gone. You know, if something happens and we see you know, something kicks off and oil spikes to 80, 85 bucks or something like that, it's not automatic that the Canadian dollar is going to gain on the back of that. It depends what the reason is. If it's a big risk issue, like I say, something's kicked off, then you're going to need to want to know what happens in the dollar. So that's when correlations can break. But overall, dollar CAD is a little bit in the middle for me at the moment. 136.50, 136s. That whole zone down here. 138s up into this high zone again is where I'd look to trade. And again, doesn't matter what happens in the middle. You can all play around with it to your heart's content. I'll just stick to trying to change the range edges. Right, what else? Gold, because that's well, let's go to oil while we're looking at dollar CAD, because as I mentioned, that's been ticking up. WTI, you know, we've had this move off of this 72, 73 area, seen a lot of traffic down here. You know, last week it was looking like it might be breaking down, but we've got the bounce. It's taken a while. The move down was really coming in again on the back of, you know, falling commodities, a poor manufacturing picture globally, slowing economies, whatever. And this bounce once again looks like it's all coming on the back of what's going on in the Middle East and Ukraine and whatnot. So this move may again be limited if, and hopefully, shall we say, nothing too bad comes of whatever situation is going on with Iran. And if Russia don't do anything silly, then probably if things start to dissipate, the news starts dying down, we're probably going to get back to the fundamental picture and have another move down towards the low 70s. And then you're probably going to see dollar CAD, for example, climbing higher. But you can look around a lot of markets. As you can see, copper having a little bounce off the lows back above $4. Got a bit of a level in now. Let's chuck a line in there. That $4 area always sees a bit of action. So we're just bouncing back a bit there. Gold is up as well. We're getting up towards that old 24.50 area. Again, I don't think this is on the back of anything else other than risk at the moment. So these levels will or could be very important. They're big fundamental levels where the price couldn't get through whatever was happening. So if we get in risk headlines, I would expect to see some resistance coming here, probably from that 50, maybe sort of every 10 ticks up to those highs again. Obviously, if we break those highs, either some crap's hit the fan or something else is going on. But also be careful that you might get a little headline fake out, a little spike to, 25, 24.90, and then a quick reversal. A bit like we did with prior headlines. I think these were prior headlines over Iran as well, back in April when they did that drone lob, if I recall. Correct me if I'm wrong. So there is a potential to see some spike moves there, but if it's just a quick move above and back below, I still expect these areas, 24.80s, to hold up as resistance. I know some of you guys and girls looking at silver. That's also following the commodity move. Didn't quite get down to that low 26s. Back up, heading towards 28. So again, know which way the wind's blowing. This isn't going up lightly because we've seen a big pickup in manufacturing activity and all sorts, and solar panels and everything. And that's the reason why silver's on the upside. It's more to do with risk. So if that risk headline is removed, or that risk is removed, then we're probably going to be heading back down again as well. Yields, 10s, they had their little pokey above 4%. We're now back down below, holding steady between these old levels, call it 394 at the moment. I'm still not against seeing yields pushing to 4%. I don't think, again, we're going to do an awful lot, particularly ahead of the data this week, but that could be the decider if we get a really quite hot beat of CPI expectations. Then I reckon we're going back above 4%, pretty sharpish. I don't think we've got the gumption to get back above 420 unless inflation really starts trending higher, and the market, set in its mood for cuts. But again, if Powell just says that September isn't as close as some of the market are expecting, then maybe we get that move up to 420s. But as always, look at yields as your guide, and obviously what the curve's doing in terms of those rate expectations. 2s as well, getting back up towards this 412 level. Again, reversing this one a bit stronger than we've seen in 10s at this shorter end. And just use these as your guide to see what the dollar's likely to be doing. Right, you guys got anything else? Or we might call it a quick one. Call it an early one today as it's Monday. Always too busy on a Monday. Hate Mondays. We should start Mondays on Tuesdays is my opinion. Quick look at stocks while we're here. Let's come in. So we mess around with this 430 level. Again, this is just one of these little levels that just shows up as you're marking a price action. We are keeping this upward momentum going. We got above the 53.30. We're just holding it, but as you can see from, you want to talk about candles, these very small candles, it shows you there's not a lot of volume going through at the moment. So I wouldn't trust this too much, but we're holding above this 53.30. Same old levels apply. That one everyone's still waiting for, 53.90, 5400, to see if we get a move up there and see what happens with that. While we're below there, though, just keeps, as I say, keeps this downtrend just in play. I probably should chuck a fib in there at some point. But again, doesn't feel like we're completely done. Back above 54, it's a different kettle of fish. Why do I hate Mondays, Ali? I don't know, because I'm always knackered on a Monday because I get up to too much on the weekend. And listen, if it was a 3-day weekend, I'd moan that I hate Tuesdays. So don't take it to heart. I'm all good, all good. Right, we'll call that a day for today. Have a great week, everybody. Have a great day. Don't forget to follow us on the Face Show later on. You can hear what all the Yankee Doodles have to say about things. Have a great day. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.